Okay, so I just want to go through what has happened in the last little few days because it was craziness. Our whole office just exploded yesterday when we realized that the Tuesday's Parliament vote was a no Brexit vote. So May put together a new agreement where the Irish backstop was in place, meaning that if the European Union was to say that we don't want a trade agreement because you don't honorate or you don't value the Irish sovereignty, that they're their own nation, that they can have their own borders. And so May put together an agreement where that was going to be pushed aside. That, okay, we're focusing right now, just you, European Union, and me, Great Britain, and everything will be fine and dandy. Well, her own government, her own parliament, the people that help her, the people that are supposed to support her, they said, no, we don't like this agreement. It is not good for us. And I saw the way that they talk to her. Like, they are really angry for some reason. Everybody in their parliament, like, they have a big, huge conference hall where all the members of parliament meet and they decide on different actions of the government. And the way that they conduct these meetings is that everybody gets a chance to speak. It's kind of like you raise the baton, and now it's your turn to speak. And there's a presiding president over this. He's the speaker, basically. He gets to tell who is next to talk. And he tries to keep everybody respectful and calm and everything. But they hackle. Like, if you guys don't know the meaning of this word, that's basically when you're in the audience or you're listening to somebody speak, and you can go, oh, boo, boo, that's not good, oh, boo, garbage, stuff like that. And, little poor May is very strong. She's a very strong woman. She's been having to deal with these guys for a really long time. And each time I listen to their parliament vote, I cringe. And basically on Tuesday, they said, we don't like your agreement. And yesterday, it was a very risky time where basically the parliament voted whether they were going to have a no-deal Brexit. So no trade agreement whatsoever, just cutting ties and getting rid of or getting out of the European Union. And that was really an interesting thing to look at but honestly, there's bookmakers, like people who take bets, and they take bets on all sorts of things, like the weather, like, who's going to win in football or the next president. And so they were voting, and it was very highly tilted towards a postponed decision. Basically, what that means is that there's not going to be a no Brexit because it's not a win-win situation. It's a lose-lose situation. And that they were just going to put away the time just a little bit farther. And I think March 20th is the deadline that they have pushed the date back to. And they're trying to have an agreement where everybody wins, where, again, we have trade ties with the European Union because they're the biggest partners. They're the closest and the biggest partners for each other. Excuse me. Oh, I needed to get that out. Okay, so that's what's been going on, and I wanted to talk a little bit about China with you guys. Now, the slowdown in China, let's have a look at their currency, has been really significant for the last 2 months. So if January, February were negative months for the German economy, right, they dipped down. So it was a time where we thought that Germany was going into a recession, and all their automakers were also showing really low earnings and really poor guidance. Like, you guys know that every quarter in the European Union, companies that produce products, they report on how much they earned and how much they think they're going to earn. Well, all the German automakers, Volkswagen, Mercedes, BMW, they all came together and had poor guidance, that their business model was changing, that they were going into car sharing, that they're changing a lot of things, and a lot of renting has been going on also. And now we have the same thing in China. I was trying to find the currency for you guys. So CNY is the Chinese currency ticker. And it doesn't look like we have it here. But how you can trade China directly is the indice of the Hang Seng. So this index, actually, this was last week's fall, and we were like, people who were on stream together with me, we all thought that, oh man, we're still coming down back into a recession. Well, this week it's been a very positive week for China if we drop down to the day-long chart. So it's been kind of a correction. Monday, Tuesday, Wednesday was good. Today we're dipping down a little bit lower, but the Chinese currency, this is what I wanted to talk to you guys about, is strengthening and strengthening and strengthening. And the situation that we have with the Chinese market is a slowdown, is a huge slowdown. And the thing that they reported on last week that I wanted to bring to your attention was 2 months of sharp unemployment. Right, in China, unemployment seems unfeasible, but nonetheless, so people are losing jobs because a lot of productions are cutting costs. They're slowing down production of goods and export. And also retail sales were the lowest since 2012. So people in China are really consuming less. They aren't number one consumer in the world. That would be the US, and then I think the European Union is close behind. But nonetheless, it is an indicator that things inside the country are shifting, things are bubbling, there's troubles coming about. And the trade wars, the effect of the constant trade war and struggle with that is changing, is shifting. And also this price action right here, you guys, we were thinking about reading candles. Now with the Chinese yuan, actually this is the holiday, so don't worry, this isn't currency manipulation. They had the Chinese lunar week, the lunar holiday, and that's what we see here. That's why there was no trading at that time. But nonetheless, you see how we have sharp declines and now it's kind of slowed down. We have passed the 200 EMA, but nonetheless, we are staying much slower, and here we have a slowdown. And if you look down here at the Awesome Oscillator, we have also an indication that we could be turning around. So I want to start today's lesson where we talk about how things turn around with the combination of, we have a downward slope of this angle, and then that angle changes into a downward slope of this angle. Now you can see that this is a more downward sloped angle and this is more, to the side. That's how things naturally, gradually come to a halt, come to a more stable stop. And that's exactly what we're having here. And also the divergence. So this word divergence means is that price action, here what we see on the screen, is very different from what we see on our indicator. Now as you can see, this is a histogram on the Awesome Oscillator. It shows us when we have a change of pitch, and it's very, very good. As you can see here, we're going down. As soon as price slowed down and we have upward movement, this shows us the upward movement right away. So as soon as we have a green bar, it is an indication to buy. As soon as we have a red bar, that is an indication to sell. So I remember I'm going to sneeze again. I remember there was somebody yesterday who asked, what is the best strategy to trade short term? And I gave a difficult answer. I said, oh, you can scalp whenever we come off of good levels. You can scalp when we have this kind of transition right here, where we have the quicker EMA come over the slower EMA. But also using the Awesome Oscillator in and of itself as an indicator is a good way to to see the reversal. So I will give you more examples as we go on of what's happening today. Also, some things with oil have been coming about. First of all, we broke out of this level, so this is a very important indicator for us here that finally oil has broken out. Now you can see that the breakout happened yesterday on the news that OPEC is increasing cuts, and Saudi Arabia is promising to keep these cuts at a very, very low level, historically low levels that they've had again for a long time. And also on top of that, you guys know that Venezuela is also a major oil producer, and Venezuela is also experiencing difficulties from sanctions with the US and internal political conflict, and also they had a power outage. So there was a power shortage in the country of Venezuela, and obviously when there's no power, then oil rigs and oil refineries, they can't work, and that's the situation that we have there. But bada boom bada bing, we have the breakout, you guys. So this is what we've been waiting for. I would like confirmation of today's trend above the 200 EMA and perhaps a correction down here. So what I want to see and what I recommend for you guys to watch. So here we break above the EMA. This is ideal, right? We might not get the ideal picture, so we might have to take some risks. But I would like to see a situation like this, where we pass first the 200 EMA like this, and then come back to retest this level as a level of support now, and then from there we can go ahead and shoot off. So I would buy from this level here, and you could even maybe put some orders, some postponed orders to buy from over here. Alright, so that's what we have for oil. Now UK we talked about, and let's have a look at what kind of trends we have. Let's have a look at gold next. And by the way, I want to ask you guys in chat, how is trading for you this week? Wow, you guys wrote down quite a bit. Let me go through what you guys have said. There you go. I like to hear that, Brenda. I am super happy that you are making money. That is my goal, and when I see that, I get even better. So I want to keep teaching you guys cool things. Now for Ajani, now you said that you missed the parabolic strategy, you can go ahead and have a look on yesterday's webinar. They all have what kind of background? Let me show you. So here I'm going to show you real quick. They all have this background, the greenish background, and you guys can find those in the history of our channel, and just go ahead and click them. And make sure to leave a like and some comments, because I do read them, and I do feel good when you guys make money, or even when you're mad at me. You know, go ahead and write that as well. I promise I won't get mad. All right, Murtala, good to have you with us. Now, you mentioned about economic indicators. This is Tanvir writing me right now. About the forecast, actual forecast, previous, etc. Like, how will that economic indicator affect a trade? Great question. I will address that right now. How can we use the economic calendar to predict that it will be bullish or bearish, like on the Brexit vote? How will that affect the trade? Okay, so first of all, you can't use the economic calendar to predict anything. This is not a prediction tool. This is a lagging indicator. So first something happens, first price moves, and then it shows up here. So this is not an indicator to show you in the moment what's going to happen. This is something that has already happened, and it happens over a long time. And then from there, we understand that now things have changed. So it's a lagging indicator. I would not use this to forecast anything. I would like to use technical analysis to forecast. Like, see, we were here for a long time, and we broke through this 50 EMA. And also, if I had the awesome oscillator, it would show us that, you know, we were crossing over the zero line with our histogram. So for me, that is an indicator that, okay, we are now adding size. We are becoming very bullish on oil, and we are going to have a breakout very soon. And for those of you that were looking for candlestick analysis, I think that was Ajani. Here, you guys see this candle here, and also this candle here. Now, unfortunately, we do have some other candles, but this one is big. It's thick, like our trends on Thursday. So a big, thick tail, not even thick, but a long tail. It indicates that there was a struggle in that area, and that eventually bulls overcame. Even despite this being a red candle, the fact that it went to this level here and then boom, instantly shot up that very same day is an indication that we are more interested in going up, up, up and away than falling down. All right, does that make sense? So this is another reversal candle. As you can see, we see it right here, reversal going back up. We see it right here, reversal going back up. We see it here, although it's not as sharply indicated. And then if we look at this area right here, ooh, I don't want to move that. If we look at this area right here, see how we have a few indications of the same thing, and then price goes down? So that's what these little tails mean. That means that price was there, we hung out, we partied at that level, and then afterwards we dropped down, and we will continue to drop down. Another candle that I want to show you guys, for those of you that are interested in candlestick analysis, is this situation right here. This area, or what we have here, is called a bullish engulfing candle. Bullish engulfing. What that means is that we're moving down, we have a downward trend, we have a big old candle going down, but the very next candle is so big and so thick and juicy that it takes over the whole entire candle. It eats it. It engulfs it completely from top to bottom. This is a very big indicator that we are bullish. We are as bullish as it gets, because the interest has completely changed. If before we were interested in going down, 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 now we're interested only in going up. And so we take over. And that's what happens. So when you see this kind of candle pattern where the next candle completely covers the one before it, that is an indication that we're going to go up. And that is an indication of a reversal. Now, as you see here, price only dropped once to that level. Usually we could have something like this, where we price is here, and then this level would drop down here. And this would be a double bottom, And that is also an indication of trend. So we tried once the level, we shot away, and then once again bears try again to take over that level, and yet again they don't have the opportunity to break through it. Now, I've also seen this is very rare, but it happens, a triple bottom. Now also, this is called a head and shoulders pattern. If it is very obvious, like this one, see, we have exactly on the same level. First of all, usually on the markets you will not see this. It'll be something kind of shorter, like the shoulders will be shorter, like so. But sometimes you do get a triple bottom, and it just shows you that we have a very strong level of resistance. But then when price moves back away and then goes past these levels here, the shoulders here, then we go ahead and reverse. And actually, I'm glad that I showed you guys this head and shoulders pattern, because that's what we have on oil. You see guys here, this is one shoulder, this is the head, or this is the head, and this is the second shoulder. And when we broke through this, I was like, we don't have enough conviction, because you see when we break, we have a little bit of a tail end here, then we have a big tail end here. So I was very certain that we're going to drop back down and stay within this flat, which we did, but then very quickly came back and then made another area of consolidation. Now, anytime you see this kind of area of consolidation from here to here, this is also called a flag pattern, but honestly, this is on a day graph. You can't really classify this as a flag pattern, but a flag pattern looks like this. This area right here, this is called a flag pattern. So we have an impulse going up, and then we have a small consolidation to the right, and this consolidation is exactly where players get in. And you can see that players got in, and then we consolidated, got in, and then we consolidated, then we shot up, and then some more consolidation, and now again we're shooting. Now, where can we go to? That's why we have this bad boy called the Fibonacci retracement. It is a law of nature. It is a force of nature. It is the way that our bodies grow. If you know that from our shoulder to our hand is exactly 38.2% of our total height. And same thing goes with proportions to our shoulders and our hips. Same thing goes with our legs to the rest of our body. It is 61.8% of our whole body. So that is a very interesting thing, and it also pertains to the stock market and to the currency market, because both are forces of nature. Money and economics is actually more, how do you explain this? Economics is not a science, just so you guys know. It is a soft science. So the math that goes behind it is also solidified with human emotions that lie behind all of these movements on the stock market. So I say that to say this: we have our initial impulse, we have the correction to 38 or to 0.5. ultimately, the goal that we can go to is 61.8% on the Fibonacci level. So we have about $5 that we can make in just clean, clear profits. Again, I want to see a break through that line. I want to see a retest, and then I want to go back through the line. And ultimately, it would be best if we could have a crossover. And if we drop this EMA from 50 to 22, let's see if we have a crossover yet. So no, we have gotten closer though, but no crossover, so no cigar, no smoking, you guys. It's not good for you. All right, so that's what we have for oil. A great breakout on my radar now. You can try to speculate from here, but again, don't give in to that fear of missing out. Try to wait for it to come back to you. Now, I didn't answer your question, Tanvir, about the economic indicator. How do we trade the economic indicator? You see here, this is positive 2.65. This is negative 3.86. What does that mean? That there's more than a 20% difference. If there's more than a 20% difference, then we go ahead and trade in the direction that it shows us. So when crude oil inventories fall into the negative, that means there is increased demand for oil. And you guys know how it works. When we have more demand, price rises. When we have too much supply, price falls. So here, this increases demand. That increases the price of oil. So if you were looking yesterday to trade oil, this is what you get. So this big old bullish candle is a result of this economic indication. So what do you do? How do you trade? As you can see on my graph, I only have 3-star rating events. So what that means is that when I plan what I'm going to trade, I look at the 3-star events that are happening, I open up the graph, I have a look at the graph, and then I put a timer on my cell phone. I put a timer when I'm going to be trading those events. And when the timer goes off, I open my economic calendar, I look at the events. Sometimes you have to refresh the page because we don't, have automatic refreshment sometimes. Sometimes it happens, sometimes it doesn't. But anyways, I refresh as soon as my timer goes off. I look at the amount that we have, and then I quickly open the graph. Okay, so we're trading oil. Boom, open up my graph for oil, commodities, Brent. Boom, open that sucker up, and then I already have my risk parameters that are 1 or 2% of my trade account, and then I slap the button that I'm making the trade in. You can either trade here, or you can trade on the Forex platform here. I hope that answers your question, Tanvir. Ask me more if you have them. All right, so we had a look at oil. Meaning of EMA. EMA is exponential moving average. If you want to learn more, go ahead and visit our webinar from any other day where I explain it very thoroughly, or especially on Wednesday, where is Awesome Strategy Wednesday, which was yesterday, where we go into detail about trading strategies that make you money. And exactly, so we have Brenda that is one of our star pupils. She is a aspiring trader, and she learned this strategy that makes you money, and she actually is green for the day. Congratulations to Brenda. Woohoo! You rock. All right, so how will you trade them? On which time frame does that suit most? Good question. Which time frame? Now, I look at the graph on the daily time frame, but I trade on the hourly time frame. So here, I drop down to the 1 hour. Now, the reason I do the daily time frame is because I need to see what globally we have and what our lines of support and resistance are. Here you can see them clearly. And then I drop down to the 1 hour, and I do longer term trades. So here, this was just our scalp from yesterday, but here I would also trade 1 or 2 hours. On a news event, you can even drop down to as low as 15 minutes, and that'll give you a clearer understanding of where price can go. And obviously, you take the 10 to 15 minute time frame as well. 10-minute time frame as well. All right, so that's how you trade that. Let's have a look at gold, you guys. Was Hannon in with gold? All right, so we are continuing the downtrend. We've been going down, down, down. Actually, we've been going up. Holy smokes. So the day for today, it looks like gold. Now, what is this is a little bit misleading where it just says gold. Actually, it looks like a currency pair. So this is what gold looks like, and I want you guys to keep in mind that it is always connected to the US dollar. So if the US dollar falls, obviously old gold is going to grow. And that's the correlation that is between them. And oil is also Brent USD. Oil is also traded in US dollars. So those are the things that you need to keep in mind, that you're not just speculating on the price of gold, you're also speculating on the price of the US dollar. So for gold, we don't really have a trend. This is really choppy waters for me. We came back into this level of price action, 1309. We're staying around 1300. I can't really tell you where gold is going to go because I don't know. I want it to break through this level, this long-term trend that we have from 2015. And until we do, for me, this is like choppy waters. We've gotten to, we haven't even gotten to 38.2, so I expect more downward movement, but I'd like to catch it when it beats this trend line and drops down to the bottom, because you can see, even though it's from 2015, here this is from 2016, it is still very respected by this commodity asset. And also we had the crossover on the EMAs, and I myself personally am very bullish gold, but this is showing us some choppy water. So I can't really classify this as a trend, nor can I say that, okay, we're going to have a continuation for the bullish trend. I want to wait and see until we break above 1308, or until we break below this trend line or around 1292. All right, and see how also price is incredibly close to the 50 EMA. To me, that's where I want to hold on, because I'm not sure about what's going on. So no obvious trend for gold. Up, down, an easy way to lose money. Be careful. Now, if you guys can tell me what asset class you want to look at, we'll go ahead and analyze that just for you. What is MACD? MACD is a oscillator. It has moving averages that show you direction, and it also has we won't go through MACD today, unfortunately. I will go through it for you on Wednesday. All right, Obado, thank you for your question. I personally don't trade the MACD. It doesn't give me what I want. I have moving averages anyway on the line, and then I have the awesome oscillator that shows me whenever. So this histogram is basically, I have the MACD on my graph. I have two moving averages, and I have a histogram. The same thing. That's exactly what the MACD is. But I like to work with them separately because they show me different things, and I like the moving averages on the chart. How will you trade them? On which time frame does that suit most? Okay, so I answered that question. I've been following up economic indicators some days back. Okay, good. I also look at monthly economic indicators too. Here you can, in the drop-down menu, you can specify a whole month and look at the whole month what happened. So that's a way to use that. Let's have a look at the S&P 500. So we still cannot break this level here. Today will be the day where we realize if we're breaking through this level or not. Now, let's have a look on this graph. We pierced it, and we cannot seem to solidify above that level. I'm very hesitant to go bullish. It's been bullish all day, or all week this week, with gaps too. But the rhetoric that's been coming out of the US has been pretty pessimistic. There's a slowdown, there's negative expectations. Coca-Cola is looking to earn less. McDonald's is saying that people have been eating less, and I can't imagine that, right? When we have more people, right, more people eat more food. And so McDonald's and Coca-Cola should be growing, and which they have. The last week they've been growing really well. If we take a look at their shares for McDonald's, growth all week this week. Same thing for Coca-Cola. Now this is one of the trade strategies that I use. Actually, we're not quite there. One of the best trade strategies for the stock market. Now I showed you that breakout strategy yesterday, right? That's a sweet strategy. But for the stock market, the #1 strategy with the highest return is a breakout from the very top levels, so high of the history of the graph. Here we have the closest history of 116. When price breaks out from this level, there's again 3 entries that you can take. You can take right as soon as the breakout happens and just sit tight in that trade. 2, you can wait for a breakout and retest. That's the one that I like. Or 3, you can wait for a breakout, retest, and then a big candle going up. That big candle, you'll lose that money to be made, but you will save yourself the extra risk. When we have that big candle after a retest, that is a very high probability trade, like really high probability. So that's what I try to look for. Now I taught you guys 2 weeks ago how to use FinViz. Very cool site. I just slap on all the instruments that we have on a limp trade and then look at what's close to a breakout. Unfortunately, since the US stock market has been in a slump over the last 2 quarters, I am very hesitant to open more long positions. And here we have McDonald's. So McDonald's and Coca-Cola are the 2 companies that stay making money even when the whole economy is dropping down. And so McDonald's, like I said, they are not as positive on what's going to happen in their future. And so here we see that there is a triangle, but it is a rising wedge, which is a reversal pattern. Now we were talking about reversal patterns. This is one of those patterns that indicates, see how when price is up and we are showing up on the triangle, that's usually when price drops down. Okay, so it's a little bit counterintuitive, but nonetheless, this is the picture that we have for McDonald's. Right now, we're right in the middle of the trend. I mean, so where can we go? We can probably go down, and that's the candle that we're having. You can kind of see the falling star candle like we had here, and then going down, here, and going down. So same thing we have here, but I want to tell you that there's always this thing right here. Now, how can you protect yourself? This is what I want to talk a little bit more into, a really cool theory. Basically, here we have big bullish candles going up, and then out of nowhere we have this tiny red candle that's like, what's happening? How can you analyze this? How can you understand this better? I will explain to you. You see how we didn't go much lower? We went much higher, but then price came back down to this level, but it didn't go lower. What does that mean? That means people that are in this trade right now, they didn't get stopped out and they didn't close their positions. They're professionals, right? Like you guys are going to be very soon. So they waited for that day to finish, and then price continued going up. So this candle here, in and of itself, cannot be considered as a bearish candle. First, we have this three trade. They're called 3 soldiers, so either 3 green soldiers or 3 red soldiers. After you have 3 big candles in one certain direction, the next few candles are also going to be in that same direction. Now the probability of that move is a little bit less. It's not around 80, it's around 60, but nonetheless it's more than 50%. So more often than not, you will be absolutely right in trading in the direction of 3 candles in the same direction from a resistance line. Now for those of you that have been watching the trade strategies on Wednesday, you will know that that's one of the strategies that we have, right? We trade off of the level and we only wait for 2 candles. We wait for 2 green or 2 red candles from here, and then we short. So that's what we have for McDonald's, for trends in the S&P. Really interesting what's going to happen. We've just having great gap days. We didn't even reach the bottom here. This is a normal correction. If we slap on a Fibonacci retracement, oh, that's not a Fibonacci. If we slap on the Fibonacci level from there to there, we didn't even reach 23.6. And you see how interesting this is, like how interconnected these things are. Here we have the 200 EMA, and also the 50 EMA crossed over it right here, and also this is where our first Fibonacci level is. So when I use Fibonacci, and I encourage you to use them as well, it is a really, really cool tool that is very congruent and synergetic with any trade strategy that you use. But saying that, I want to say that don't use it just by itself. Just by itself, it's a little kind of shaky. Good stuff. So I like to hear Tanvir using Bollinger Bands. I used to use Bollinger Bands as well. Just because I have lots of office administrative duties, I don't have time to sit and wait for those scalp strategies. Occasionally, when I just do have it on, I will make a scalp on the Bollinger Band strategies. All right, you guys, so we're coming to the end of our webinar. I want to ask you if you have any more questions for me, if you have anything you want to talk about. We'll go through what's going to happen tomorrow. We have the Bank of Japan policy statement meeting. Now, the Japanese yen is one of those currencies that I believe will give us great strength in the time to come. Unfortunately, all of this week we've been below this line. Today we just broke above it, but below this increased trend line, and we are not having any Japanese weakness. Now, the reason for that being is that the Japanese bank, the Bank of Japan, they are one of the most dovish banks in the whole world. Now, what does dovish mean? Dovish means that they print money, they invest in their own economy, so they keep buying their own shares and stocks, and also they do not intend on raising interest rates. They actually could very well lower them. There hasn't been actually talk of lowering interest rates, but this is definitely one of the things that we have is, I remember the Swiss bank had negative interest rates, and the Japanese bank actually also had negative interest rates. So this is one of the cool things that in life, when you know about all these things, you know where to keep money and in what. So the Swiss National Bank, they have a negative interest rate of 0.75. That means if you keep money in the bank, you have to pay them money. And also the Bank of Japan also has a negative interest rate, but theirs is a little bit smaller of negative 0.1. So again, if you're not using your money and it's just sitting on the bank, you have to pay them for safekeeping. That's right. So there is a trade called a carry trade, and that's when you take a very high interest rate and you put it against a very low interest rate. Now, the highest interest rate out of developed economies right now is the Federal Reserve in the United States at 2.5. So each year that banks borrow money from the Federal Reserve, the interest that they get is, or sorry, the interest that they pay is 2.5%. Now, if you combine that with the Japanese yen, which has a negative connotation, you make about 2.6% risk-free money by trading the dollar yen. Really, really interesting. And I'm still waiting for some dollar weakness and Japanese strength, but I will be watching. Actually, I probably won't. I'll be reading it the next day just because this is so early for me. Tomorrow we're going to have an understanding of where the Japanese currency is going. So after this event comes out, come to my webinar and we will discuss the prospects of the Japanese economy in the near-term future. All right, you guys, my name is Yaroslav Burchenko. It's been a pleasure to be here with you guys today. I'm going to have one last look at any kind of questions that you guys may have, and then I'll get going. So why are you yelling? Oleyenka, Asekum. What question? Look in chat. There's no question from you. You said well done. That's all you wrote. No screaming in chat. Okay, well, I have now some things about the candlestick. Now, so good. Let's go. I'm glad. I'm glad I answered some of your questions. How many trade do you suggest I should take a day? As little as possible. As little as possible. The reason for that being is you need to wait for one good trade. If you have more trades, there's two negative connotations. First, you overpay in commissions. Second is that you take on unnecessary risk. That's okay. Oh, it's okay. I was just joking too. Like on the internet, if you write in all caps, it's considered screaming. That's like when you're trying to get something across. And in chats, in certain chats, they ban you from writing in all caps. But unfortunately, or not unfortunately, thankfully, I don't care if you write in all caps, so you probably hit the caps lock by accident. Anyways, getting back to what we were talking about. The less trades you take in the day, the better for you, because the more patient you are, the better trade you will take. And it's not about taking a lot of little trades, it's about taking the trade that makes you money. And when you're trading options, it's very important to wait for that really precise moment, because it's very difficult to time, because you're analyzing the graph, you're analyzing the dynamics of the movement, and you're also analyzing how long it will take in this certain process that is going on. So with options and with Forex, timing is everything. So trade as little as possible and wait for one good trade. A professional hedge fund manager told me that. He said, wait for one good trade, and then one good trade, and then one good trade. Thank you, Mr. Billafury. All right, so it would be great at the end of each webinar you give a trade of the day, like for example, US CAD would go up or down in X minutes. Like, it would help us analyze the market properly. Actually, I do that anyway. Every day I do a trade of the day, and you can find it on this channel. So that's awesome that actually you mentioned that, Tanvir. It's called the trade hack of the day. Trade hack of the day. Now make sure that it's my voice that you hear on the thing, because there's also other analysts and we sometimes disagree in the way that we see the market. So heads up on that to you guys. Alright, so thank you very much for your attention today, you guys. It's been a pleasure. I wish you guys good luck trading out there. Please come back tomorrow at the same place, same time, and we will go over what happened through the week, any kind of scalping positions that you can make for Friday, right, when it goes up against you, and then what we can expect over the next week to come. All right? My name is Yaroslav. It's been a pleasure, you guys. Good luck trading out there. Peace.